Welcome back, everyone, to another episode of Economic Preppers, where we're here with Patrick and Dylan. Let's start with Patrick. How you doing today, Patrick?
Great day to talk. I'm so happy. It's a beautiful day in
So much,
Oregon.
so much to talk about. So much, Dylan. How you doing, man?
I'm doing fantastic. A little tired, a little beat up, but fantastic.
Yeah, we'll talk about how you got beat up a little bit later. That'll be interesting to talk about. But for those of you just tuning in and used to our show, thank you as always. Like, share, subscribe, hit the notification bell, all that cool stuff really helps out the channel. Share this out. We are also doing something a little bit different. This is the full episode that you're watching right now, but you're going to see some segments too. We're going to release them as well. Same kind of content that we're doing like in every show. No guest this week, but we will kind of break things up so we can segment the show. So we'll release the hour-ish full episode along with a few segments around 10 to 20 minutes, however they turn out to be, and see how that does. And if you like that, please leave us a note or a comment, and that will really help us to know that that's the right direction for this channel and these episodes. So a little bit more work on our editor, but he has a little bit of time today, tomorrow. We'll see, and that's me, but we'll figure that out. So let's jump right in. Our first segment, as you might expect, is about the U.S. It's about the big news. There's a lot of big news, of course, but one of the big stories that came out this week is middle of the week. We had the Fed Chairman Powell came out, talked about banks, talked about deposits. He had a speech. The Federal Reserve raised the rates 0.25%. At the same time, Janet Yellen decided to give a speech and confused the markets and people as well. So, Patrick, I know you were watching this in real time. What were your thoughts as you saw this unfold this week? And are our deposits safe?
No, our deposits are not safe. Let's start with the first question, right? Because that one is such an easy one. Nothing is safe in the dollar. That's how I feel. You guys know that. So
what
I thought about his remarks was just like, it was just like absolute shittery, right? What was he saying? Let's talk about this. So he's saying, no, the banks, everything is safe in the banks, but we're only going to bail out the big banks, is what Yellen is saying on the other hand. But then they're asking Yellen, hey, well, so are you going to just only bail out the big banks? And she said, well, we're going to see if they meet our criteria. What's the criteria? If they're a big bank. Why? Because the money just goes back from one place to another, back from one place to another, and a 1/4 point hike. I mean, they just threw in $300 billion. Like, it appeared overnight, and then it got spread out, and they're not even putting them into the banks. The banks themselves don't even want to invest the money in us. They're putting it into like really low yield interest bearing stuff. I mean, man, I'm so hot about Powell, and I don't like Yellen, and I think she is just a huge liar. How could any of this stuff not impact the United States? How could it not impact the entire average, everyday, working American citizen? I don't care who you are gonna feel the sting of this. Holy moly. These guys are just criminals.
Yeah, well, I'll get to that. I'll voice my opinion on some of those things as we go. But Dylan, let's get your take on what's happened here as you were catching up after a few days off this week.
Yeah, I mean, so many times we've seen in the past, especially few years, when some prominent figure that's been the talk of social circles comes out and says something. It oftentimes means the opposite, right? We've heard it in safe and effective. We've heard all these things. And so when he comes out and says your deposits are safe, that means people are worrying. That means people are giving him an agenda saying you need to address this. You need to quell the fears of the population. And with some of the largest bank collapses in history happening in just the past weeks and those being kind of swept under the rug like no big deal, like it's reasonable for individuals to be concerned and to not take what Jerome Powell says at face value, right? Because what does it even mean that your deposits are safe? Like, what is the implication of that? So, you might be able to get access to your money at some point in time, but how much purchasing power will you have after you can get access to that? That's a huge issue. And we're here all talking about things that you can self-custody. If you look at our logo, we got the Bitcoin, we got gold, we got silver, and we even have some axes on there for being able to be self-sovereign and be able to self-custody your own stuff and not trusting a third party. And that's that's a huge problem. I think people really who haven't thought about it, the counterparty risk involving a third party in assets that you own or need or want to get access to is extreme. And like we know about it because we deal with Bitcoin and crypto stuff, but the average person doesn't. They don't realize the risk that they're taking, especially right now with all that's going on in the world.
And I would even take
Yeah.
a step back. Like if I were to say, okay, Patrick, do you think that your deposits are safe? I might even say yes. Let's just say yes to that real quick. If the answer is yes, our deposits are safe, it's because they can print as much money as they want and put it in the account. So therefore your money is again safe. It has nothing to do with the fact that they are good stewards of your money. It has to do with the fact that, oh, we could just make more of them. Just print off another trillion, send them to the big banks. You're good. You're covered. Don't worry. It's all safe. All your deposits are safe.
Yeah.
There's so much we can go into this. And first off, I will correct for our audience, just so you know, now we all know this. We interchange money and currency a lot. We see that a lot, but they're printing currency, not money. And people are going to learn real soon that silver and gold and Bitcoin are money, the tangible or intangible assets, but currency is, especially fiat currency, all dies eventually. So, and you can't make more money. You can't just produce more silver, gold, or Bitcoin unless you go by the rules or dig it out of the ground. But the currency, you can just make it out of thin air. But going back to Yellen and Powell, which was amazing that they were both talking at the same time. And I've seen many press conferences from both of them. They often don't tell you anything. Everybody tries to watch these things, read between the lines, see the direction that they're going. But these two people are really PR arms for the United States. And that's just saying, like, okay, everything's fine, nothing to see here. It's kind of like, Naked Gun. It's like, nothing to see here, please disperse, we're all fine. Well, everything's burning right behind them. All right. They are trying to calm the markets. The mere fact that they have to talk about, is your currency, are your dollars safe? The mere fact that that question even comes up means that people are asking that question. So they are concerned because they're saying, what about FDIC? Is FDIC legit or not? And there's been many videos, and I've been talking about this a while. It's so grossly underfunded. The insurance is about 1.5% funded where it should be.
Doesn't matter. They're just going to print more money. Who cares?
I
It doesn't
agree.
need to be funded at all.
But then you get to start talking, and we will talk about how this ties into crypto and the particular banks that went under. We talked about that in previous episodes as well, and how that's sort of a pseudo conspiracy theory. But most people have caught on that most of the banks been targeted lately do have a crypto angle. But also, this is an angle to launch the CBDC that they're trying to accelerate, and that's certainly going to be continuing a topic. And we could, as blockchain people and crypto people, that we understand this. We know the differences between blockchain and Bitcoin and CBDCs. They are not one and the same. They're very different. CBDCs and Bitcoin are nothing alike, and people have to understand.
They're going to make the best version. I'm sure the Fed, they know better. They're from the government, and they're here to help.
Of course. Thank you, Ronald Reagan. I appreciate that quote. But this is a perfect opportunity and angle for them to launch CBDCs and say, hey, we understand that we only have $2 for every $100 that are in the bank, but we'll supplant that and give you 98 CBDC dollars to make you whole.
Yeah.
And now they've injected 98% of what they wanted to inject in there in the first place, and see if they can get that into circulation and get the velocity money going again, because that's also been struggling in limiting the economy, because people aren't spending because they don't have the money, they don't have the currency to spend. So there's so many different angles you talk about that, and we could talk on that one topic probably forever. But another topic that's coming up about the U.S. economy is they're trying to control inflation in many different angles. So they raise the rates a little bit, just like the UK did. We'll talk about world events soon, but they're also talking about labor and unemployment, and they're trying to drive unemployment up because they figure out a correlation between unemployment and inflation. And the higher the unemployment, the lower the inflation. So they're going to try to drive a lot of unemployment now, but we're getting all these stories like Walmart layoffs. We have another one from Disney with layoffs, and we've heard from Amazon. And these aren't just like 500 people. This is 7,000 people from Disney. Yep. You've got Walmart was, I don't even know what this number was, but it was a large number in here. Maybe you guys can tell me because I can't remember what it was, but it was
I think
big.
it was like
But
12,000.
yeah, but also if you look in this story, like at the very bottom of it, right from Zero Hedge, there's a great graph that shows you this area in red at the bottom here. The cost of living has outpaced wage growth for Americans, which means that their buying power, their purchasing power is going down, even if they hold a job. So they're making, they get it, yeah, for 2 years. So, I mean, there's lots of talk, comment. Dylan, please lead us off and make some sense out of all this if you can.
Oh man, it sounds like a classic case of optimizing for the wrong variable to get the solution that you want, right? Like it's a I don't know. There's probably some quippy saying out there that encapsulates that. But when you said that they found a correlation between inflation and unemployment, and that the higher the unemployment, the lower the inflation, and inflation's been a big thorn in their side for the past couple of years, and then wanting to reduce it, and so they decided to do that by reducing the number of people employed. Like that just sounds like a terrible thing, because what's going to happen to those people? I mean, at least as an individual that cares about people, that's terrible. But maybe as the government, you're like, wait, we can just increase the number of people that don't have jobs, and at the same time increase the number of people that are now dependent on us for their livelihoods, and we can also make the economy look better by decreasing inflation by doing that. That's just recipe for disaster. It just seems like a system making a fatal mistake.
Seems like the whole thing is a recipe for disaster. But Patrick, what's your take on some of this stuff?
I just don't trust any of the numbers they're telling us ever. Even when it comes to unemployment, they revise their unemployment numbers, so our unemployment numbers aren't even accurate. We've seen that happen a lot. I mean, if you look at how they reverse the numbers, we went back like 5 months, not only in unemployment, but let's also take a look at other numbers that they're not telling us the truth about. 5 months ago, they started trying to reduce the amount of assets that were held on the U.S. balance sheet. And so we were down to we're down now where we came back to, because they printed all this money, is like 5 months worth of work from them trying to correct the balance sheet and work on inflation by increasing interest rates and reducing the number of jobs available. But yet here we are 5 or 6 months later, no better and a whole hell of a lot worse, waiting for something even worse coming because the numbers haven't caught up yet.
Yeah, and they can paint a picture in a lot of different ways, and a lot goes back to real estate. And we're going to look at a video in a moment here from Jack for Nobody Special. But we're like, even the real estate, one of the last bastions of wealth, of having wealth available to us, those prices are coming down, and commercial real estate is getting impacted. So there's a lot to talk about just that. So Patrick, if you could share that video.
Real quick, I just want to comment.
Go ahead, Dylan.
Just on the unemployment numbers and these layoffs, you've seen the meme out there where it's a joke on the minimum wage per hour, and then it shows McDonald's opening their first like fully automated restaurant. So you basically using machines and AI to run the restaurant, right? Because they can automate away jobs at this point in time, and that's going to happen faster and faster and faster. I know we've talked about ChatGPT and these various forms of AI and the growth of that sector. And what that does is that just streamlines a business process. I just heard a TikTok video, this guy talking about consultants and Microsoft launching their AI program for Microsoft Word, to where you can have it record your calls, take meeting minutes for that call, create action items, and create an output to share. So like, it's like, hey, create a 10-slide slide deck encapsulating the meeting and the client's goals and where the client's at and where we need to take them. And the AI can do that in just minutes. So what would take a whole team of consultants or a manager and a couple of analysts can now be distilled down to a conversation between the client and one person. And if you scale that out, like, and that's a complicated job like consulting, where you have to have insight and, you have to have some experience in structuring things. But if you apply that to just task-based jobs, where it's step 1, step 2, step 3, step 4, right? And you look at the combination of the Boston Dynamics robots and AI, like jobs are going to disappear so fast. And that's a whole new thing to contend with. So I just want to point that out when we talk about job loss. So that's coming.
Yeah. So here's the video. Patrick, go ahead and hit play for Jack's video here.
All right, let's talk about Blackstone. We had this one came out just yesterday. This is Joan Solotar. She's the head of private wealth solutions at Blackstone. She was giving this interview with Bloomberg yesterday. And there was a whole lot of blah, 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 blah about liquidity in there. She was really doing a lot of CYing of her A. But it's this comment that she made that commercial office real estate in the U.S., specifically office, is much worse than people think. All right, now that's important because I want to just give you a quick review of a couple of things Blackstone has been in the press about lately. All right, check out this one. Blackstone stops making payments on a $325 million Las Vegas office loan. That was a 1.5 million square foot office building. Blackstone just walked away. We're not paying for it anymore. That was on March 21st. We also had Blackstone defaulting on this Nordic mortgage-backed bond. That was on March 3rd. And that was a 531 million euro bond that Blackstone defaulted on. So they're just walking away from their loans right now, just defaulting on them. Things are not going very well at Blackstone. Oh, and what about this one? Blackstone's B-REIT. This is hilarious, by the way. B-REIT, that's Blackstone Real Estate Investment Trust. It's the biggest commercial real estate investment trust in the country. All right. They've got tens of billions of dollars of commercial real estate. Now, they released this note a couple of days ago, and this is hilarious, that their B-REIT records their biggest advance in 6 months. Blackstone's Real Estate Investment Trust, the Blackstone Inc. Fund for Affluent Individual Investors, reported its biggest monthly return in 6 months in February as dividend payments and rising rents offset a decline.
Do you hear that? Biggest ever, but just keep listening.
In property valuations. Now, the reason this is truly hilarious, and it shows you just how disgustingly biased the financial press is, what they're not mentioning in this article is this headline that B-REIT has limited withdrawals from the fund for 4 consecutive months. All right, so I just take this in context. They're walking away from mortgages all over the country. They're talking about how they had their best month in 6 months, and the dividends and the payments offset slightly declining valuations. Well, it's easy to maintain higher valuations when you don't allow your investors to withdraw their money for months.
So,
Thanks,
Dylan, I would like you to comment on that little clip there because I know you and Jack hit it off pretty well. So I figured he would like to see you respond to that one.
Man, it sounds like they're propping up the value of their own fund by restricting cash and capital outflows from their system. It sounds similar to what happens in other places that are struggling. They reduce the amount of capital going out in order to keep the things that they're invested in still looking good, so they can get their ducks in a row before it all comes crashing down.
Yeah, kind of
That's
reminds me of
before what?
Before things turn ugly.
Yeah,
before,
I mean,
have you seen the South Park meme where it's like, yeah, and then you deposit your money here and it's gone.
Yes.
So
wait, what?
And it's gone.
I mean, this is the weird stuff that how are we not paying attention to this stuff? This is so important and it's happening all around us. And understand what he said. They're defaulting on euro bonds as well. What is that going to do to the value of the euro?
Yeah, and I'm sharing this. This is another story from Blackstone a couple of weeks ago about how they they're REIT and they're limiting withdrawals, and also this story like Zero Hedge, like they started doing premium and they started hiding some things, but the title says it all. Nowhere to hide in CMBS, which is commercial mortgage-backed securities. If you've seen The Big Short, if you've seen Too Big to Fail, we are on the brink of that again, and that was 15 years ago in March. When it started, but it took 6 months to really play out because Bear Stearns was bought in March of 2008 on a fire sale, and then it was waited till October for everything else to collapse, and we lost Lehman Brothers. So and other banks merged, but I think that it's gotten way worse, and there's way more currency in circulation now, which means there's way more derivatives and way more financial instruments that are out there in this financial system that's just waiting to implode. So just to wrap up this section here, I think we should take a look at the DXY before we turn the page over to the world events, but which has got plenty of other things going on. But Patrick, as I pull up the DXY, you want to walk us through some of that?
Yeah, I think it's really important to understand once again that the DXY is a relative value measure for the dollar in relation to other currencies around the world. And some of the biggest currencies that it's weighted against right now is the yen and the euro. So when you look at the dollar going down, we were just at $115 this summer. Now we're down to 105 last week. And you saw as the Fed spoke, we just see this rapid decline from 105s down to 102, even to 101. We hit into the 101 range. So to me, that is showing here two things. One, it's occurring globally, and the impacts of the global financial markets do hit us back home. Because what you end up seeing is when the Fed is talking about this garbage here, and he's releasing, I'm going to have a 0.25% interest rate, the banks are safe or they're not safe, we're not really sure what's going on. What he is projecting is uncertainty. The market doesn't like uncertainty. So you're seeing the entire market react. And then on the other side of the globe, when you wake up, they've already reacted to it, further driving down the DXY and causing more instability across the entire global market. It's like a pendulum swinging back and forth. But every time it goes back the other way, someone like another person pushes it and it just keeps getting much more violent. Eventually, this is going to break. And I guess we're seeing that this is really, truly causing us better like defense mechanisms when we have gold, silver, and Bitcoin, because you see the impacts of that on those values.
Yeah, I think that's a great summary of where we're at with that. And we've got a few other stories as we turn the page towards world events, and we have banking issues over there as well. So as I start talking about that, and we'll get to precious metals as Patrick did mention there, but there's a lot going on overseas, and I'm looking for the right window as always. But Dylan, while I find that, any comments on the dollar?
Yeah. It includes the dollar, but I want to take a step back and point out a pattern that you should recognize. And when you start seeing this pattern, immediately red flags go off. And it's when everything is fine, yet then there becomes limits on withdrawals of your funds from custodians, things like that. Where there's more controls put in place, so it becomes more difficult or more hoops to jump through. This happened in the crypto space. One example was Voyager. When Voyager collapsed, everything was fine, but then all of a sudden you could only withdraw like $10,000 a day, which may sound like a lot to the average person, but if you have $1 million on Voyager, right, that you need to get off there because now you can't just withdraw $1 million. Now they just tell you that you can only withdraw 10,000, right? That creates a real problem. That creates a constraint for you. And you're like, how much money can I get out before the inevitable happens? And I can't get access to any of my money or any of my capital. And so this same scenario, Voyager ended up collapsing and people weren't able to get all their money out, even though they were trying. So once those things start happening and being put in place, it can spiral downwards pretty quickly because then people start to notice, hey, why can't I take my funds out? Why can't I get access to these? Why are there these new rules there? So they start to pressure more, ask more questions. They start to try and withdraw more. And then the controls get clamped down. And then eventually they're like, hey, we have to pause withdrawals for the well-being of the bank or the well-being of whatever institution or fund that you're a part of. And at that point in time, like, you now have no access to your funds. And then it gets tied up in court or bankruptcy or whatnot, something beyond your control, and you're taking a haircut or you're not getting it back. Or if you do, it's years down the line. The same type of pattern is playing out in all these different spaces in some form or another, or some scales larger than others. So just something to pay attention to when you see those things, especially as it pertains to your own individual life.
Yeah, the financial system works just fine as long as there's confidence in the system. When confidence goes away, there are runs on banks and banks close. And then people like Yellen and Powell have to step in and do some PR and say, everything's fine. Don't worry about your funds, even though that may not be true. And it's not just limited to the United States. As we've talked last week, we talked about Credit Suisse, and we talked about how and that's over in Europe, and how that's UBS, a major merger over there. They spent a ton of funds over that. It originally was talked only about like 3.7 or 7.8 billion, which is still a large number. But Switzerland had to pledge over $170 billion worth just to keep Credit Suisse from collapsing, taking down one of the largest financial systems in the world with Swiss Bank. Everybody's heard that term before. That could have imploded. And even in the midst of all these bank issues, not only is the United States raising interest rates, so is the Bank of England. They did it as well. They raised 0.25%. So the banking contagion is just borderline, just almost at that tipping point already. But as we talk about different currencies, the one world conversation we need to talk about, not many people were talking about. I think I saw it on Tucker Carlson the other night, but he did talk about the stories that we're not talking about, and he did a great job of leading into the story. But there's that: is there a new world order or a new world currency coming? And is it? We need to talk about the meeting between the leader of Russia and the leader of China and what they spoke about. And Patrick, I know that we talked about this. Dylan, I'm not sure if you've seen the video from Xi and Putin. Have you seen that yet?
No, I'm excited to see it.
All right. Well, Patrick, I don't know if I have the clip. I don't know if I can share it, but I can certainly share the tweet to it. Patrick, why don't you give a little bit of color to this to catch Dylan up here and our audience?
Okay, so what has been occurring, and Joe Brown talks about this a lot on Heresy, is the de-dollarization, right? So I could step back and cover this from multiple angles. Fundamentally and foundationally for me, as someone who is like a Bible reading believer, I see that it talks about one world currencies coming. So to me, this doesn't exactly surprise me. But what is surprising is that I'm actually getting to watch it play out in front of my eyes. Because what you're seeing here is now China and Russia are making deals to trade in the yen backed by gold and in the ruble backed by gold. Russia is just like really happy to trade with everyone. And what they're saying to the US is, we don't care about your sanctions. It doesn't affect us because we have found a new road, a new yellow bricks road to trade on.
Yes, the Belt and Road Initiative, which I know Andy Scheckman's talked about that. I've talked to him about that before. A number of people, it's the trade routes. Ray Dalio spoke about that in his great book about how I think it's called New World Order. Is that right, Dylan?
The New World Order? Sounds familiar.
It was Ray Dalio's book, but anyway, he talked about like one of the 8 components of the leading economies and how trade routes are one of them. Mm-hmm. And now China, with working with Russia and Putin, we've talked about this for. I know I talked about this for. Went and looked up. I've done BRICS videos on my other channel on Litecoin Leader for at least 7 months, and like Russia, like the typical response to a country that's not playing nicely with the United States is they put sanctions on them, mm-hmm. and that limits them or removes them for access to the SWIFT system, which is how other countries often trade currency back and forth. But it's really just a messaging system. It's not. There are ways around it, and there are more and more ways around it every year. And now, like Russia and China are now like the largest supplier of oil to China is now Russia, not anyone else. They're also one of the biggest trading partners. They're working with the ruble, which is backed by gold, and forget the petrodollar, but they're now dealing with the yuan, which is tied to the ruble.
Yuan. I said the yen, the yuan.
Yeah, close enough. It was on the screen. You're good enough. So, but we'll talk about yen another time. But with all these countries now, they're in the same clip that I shared on the Twitter clip, which will be in the links for the show down below. But they're already talking about how this is going to spread to the other BRICS nations and be part of Latin America and Asia and South America, like basically half the world and over half of the population. So everyone's running away from the dollar, and they're running towards an alternative currency, hopefully one that's more stable, and a gold-backed currency like the ruble tied to the yuan seems like a good answer.
I mean, I'd rather use the ruble than the dollar at this point.
Yes, I would tend to agree, which is a very peculiar statement for some people.
I can't believe I just said that, but that's
exactly
the truth. I mean, as we all think about it, we're all going, "Oh crap, I can't disagree with him on the air. That's not looking great," but it is the truth. But we'd rather all use gold, right? I mean, that's what we're saying here is gold is what we'd rather use. And the average American still has this misconception. It is a myth that the dollar is backed by gold. It is backed by nothing.
Well, once upon a time it was, and we will talk about that in one of our later segments on the history that people need to know about what happened about 60 years ago, where we were talking about going off the gold standard. Had not done that. That happened in 71, but certain events happened in 1963 that we'll talk about a little bit later. But yes, going back to a money-based system instead of a currency-based system that's based on fiat belief in the government, that's a problem. And most people they have never experienced it because it's been over 50 years since we had a global gold reserve currency. We don't have that anymore. So the faith is wrecked. But now that is a great transition to our next segment, which is all about precious metals and being prepared. So you're not scared. So this is the true economic prepping and also prepping in general. So our first story that we need to talk about is on the precious metal sectors. And I'm going to lead with of course, I'm going to throw this over to our number one precious metals guy here, which is Patrick.
But
and
first,
as I work,
like, comment, share, and subscribe, especially if you love seeing
absolutely.
Patrick talk about precious metals and how excited he gets.
If you do like to hear me talk about precious metals, and you did hear what Dylan just said, and you do like, share, subscribe, and comment, the 6th person to leave a comment and share and say stock pulse. That's it. Very simple. I'm going to send out some silver to you. So it's that simple. 6th person to leave a comment gets silver. So maybe be 5 and get your wife to be 6, right? So that's a simple one. But you want to talk about silver? I'll tell you why what I just did is a really great deal for you guys, because the premiums are going up like crazy. The supply of silver is not there in the stores. Right now, we have a really big need for silver and for these other precious minerals that drive our economy. And we are getting the supply eradicated, right? We don't have the supply to meet the demand. So that's my job there at Stock Pulse, is to try to really figure out what we're doing with the inventory here, who is providing supply to the North Americas, and what are we going to do to meet the demands of our future. So what we're seeing in the silver industry, especially silver and gold today, I think gold's going to be hitting an all-time high this month. I just talked with Shielded Prepper this morning. Him and I are both going, this is really happening right now. Gold is going up, and it's going to go above what 2,200 was the all-time high before. Silver, wow. If you could try to get silver, my store here is out of silver rounds. And if they had them, even though silver is $23, there's an $11 premium on silver rounds, not silver eagles, silver buffaloes. What is that indicating to you?
That screams to me a shortage in the supply of silver. And
so again, 6th person, just comment and I'll send you some.
Yeah, and this is a race back to real money that's been gold and silver have been precious metals, been considered money for thousands of years because of the properties it has. And we'll talk about, I've done videos on crypto versus precious metal certainly exceeds fiat currency for holding and storing value for time, which is the main difference between money and currency. If it stores purchasing power over time, it's true money. If it can erode, like we've seen with the dollar for the last 108, 109 years, down to like 2-3%, if that, of the original purchasing price or purchasing power, it's a fiat currency, and it's just gone. So,
and I like the saying, just to conceptualize that, is in an inflationary environment, money breaks down into an asset layer and a currency layer, right? One to store its value over time, and one to use for easier exchanges and day-to-day transactions. So that's helped me conceptualize the difference between, when someone says money or a currency.
Yeah, and it's an important distinction that people like. Money is just an easier word to say than currency, and it's just so the vernacular is just out there. Everybody says money, and like it's interchangeable. But this is, again, the PR. We talked about PR in one of the earlier segments, and if you haven't seen the whole show yet, we're going to put links. I can't point up here because I'm in the middle of the show, but we'll put links up in the corner. We'll put links in the bottom to the entire episode. If you're watching a clip, we're doing several clips this week, but also we're going to offer you the full show as well. But in one of our first segments, we talked about how Yellen and Powell were doing PR to say everything's fine. And that's really just their job. Part of the job of the Fed and the Treasury and all that is to push the dollar system, to push everybody to say, don't worry about this. Feel free to leave your currency in the bank, sell it, spend it however you like, but leave it in the bank, because then you don't have to draw it out and cause runs on banks. So that's really what their number one job is right now. Try to save the banking industry as long as it's possible. Even the reports are coming out that 180 to 190 banks are on the tipping point and could be leading us to the next big short event.
Dude, I disagree. I don't think that they are trying to let this hold on as long as possible. I just don't believe it. I believe this is a coordinated effort, that the timeline is exactly as they want it. Choke point 2.0 is happening right before our eyes, and it is being done methodically, strategically, and they are going for the pressure points that they know they need to set their narrative for a CBDC launching in July. There's no
Well,
drawing this out. This is just like it's going to crumble when they allow it to crumble, when they just say we're not going to bail out a bank. And then whatever happens, happens because they're going to need that to happen by July.
Well, we've got a lot to talk about, both CBDCs and also launching like the timeline in Choke Point 2.0. Probably a number of our viewers right now are just like, what is that about? Which leads us to our next segment, which is about crypto with Bitcoin and altcoins. And we have lots to talk about there. So let's start with the basics. Where is Bitcoin? How has it been doing the last couple of weeks, and why? So that typically that is the Bitcoin miner, the veteran, is going to lead us through that. So Patrick, where are we at with Bitcoin today?
Bitcoin is strong right now. We're sitting at 28,267. So holding well through this market where there clearly is economic uncertainty, especially globally. We're looking at it all over. So I'd say the hash rate is strong for us. We're seeing the price is strong. We're looking at the hash rate going up about 400 right now. So I believe that mining is just going to continue moving forward, and the people who are validating the network are only more encouraged to do it. As the price increases, they become more profitable. So honestly, I'm a little confused why the price hasn't dipped more than I would have expected it to. But I suspect, again, it's just playing around with the value of the dollar. I believe when we see the value of the dollar at 110, what we're not really seeing is the fact that 110 is now, but everything is losing value together. So in relative value to each other, they're still worth the same, but it still buys you less globally. Like the whole globe can afford less. Bitcoin is the solution or a solution to that. But silver, as well, as you could see, silver and gold are also faring really well. So I'm not really sure what's happening with the price of Bitcoin. That's a little bit confusing to me, but clearly the tokenomics are showing us, and all the data shows us that Bitcoin is stronger than it was ever before.
Well, maybe that's a little bit about this next story that I'm going to share and let Dylan talk about, which is that this tweet from Watcher Guru said that Congress is introducing a bill proposing Bitcoin mining can help achieve energy goals and grow the U.S. economy. So they're putting that story out there as a positivity towards Bitcoin. Maybe that's one of the accelerants to make Bitcoin go up. Also, with banks failing, that's probably another impetus. So what do you think there, Dylan?
Yeah, so a couple good points here. So I want you to go back first to the page you shared before. It shows all the data.
Get you there
on Bitcoin.
Yep, on Bitcoin, and I want to point out a number to everyone. So the cool thing here is you can see all the data with Bitcoin, right? It doesn't just change. You can see each block happening, what transactions, what outputs, and then the thing to look at is the addresses, right? That's almost 50 million addresses for Bitcoin. Now, that's not necessarily that many people. There could be multiple addresses and things like that. But when you combine that with the next page you shared that says Congress proposes a bill, what does that kind of signal to you, right? That there's perhaps a voting bloc and intransigent minority, as they're commonly called, that are single issue voters, right? Are you pro Bitcoin? Are you not pro Bitcoin? And there's more and more people that are getting involved in politics or are involved in politics that are starting to understand that there are a large portion of the population or a good number of people that they might want to win over. And so Bitcoin is making its way into the legal system when it does that. So that's like on the surface. So it's very positive, very bullish seeing that, seeing bills around pro Bitcoin solutions be announced. I think the other thing is that when it talks about introducing a bill for Bitcoin mining that says it could help U.S. accomplish its energy goals, it's common in many Bitcoin circles to talk about how Bitcoin is probably one of the most ESG friendly industries out there. The government, that's like the big enemy, right? The big woke enemy that we always bash on. But when you look at what Bitcoin's doing and how it does it, it's very, very climate friendly and incentivizes investment in clean, cheap energy costs. And it helps monetize those energy sources that we want to build, but don't necessarily have the demand for yet, as kind of like some people talked about as like a pioneer species. And so it's really cool to see this come forward. I think it's a huge positive for Bitcoin as a whole. And I think it's also something to look into, and we should probably talk about more how Bitcoin works with how Bitcoin mining works with energy, with the environment, and why it's something that is actually better for the environment than it's giving credit in the mainstream media.
Yeah, I think there's a lot of misconceptions with crypto and Bitcoin and blockchain. And if you want to know more like that, or interested in a particular, if you want to see a show just dedicated to that topic or segments, please leave a comment down below and like and share and subscribe, all that good stuff. Hit the notification bell as we share this content out. But I would say we have 20 plus years amongst us in crypto, like right here. That's a lot of experience. It's hard to find that kind of experience, and we understand the differences. But one of the things that we are spending a lot of time on this year and getting ready for is explaining the difference between Bitcoin and blockchain, and using that blockchain technology for CBDCs. And CBDCs, people are learning it really quickly. And there's another story that just came out. This is the second go around for this attempt, but wrong story. Hold on a second. This is the story I want to talk about. Ted Cruz, Texas Senator Ted Cruz, is introducing an anti-CBDC bill. This is his second attempt. He did this again last year, but he's trying to prevent this. And I believe that Florida Governor DeSantis also said he's opposing CBDCs. So, Patrick, you think this is going to have any legs? Think this is actually going to get pushed through?
Absolutely not.
Could you elaborate?
They hate Bitcoin. It's pretty simple. They're not going to allow us to block CBDCs. It's coming.
Dylan?
I think that there's something interesting at play here. My dad mentioned this about like freedom states and pro-freedom states and non-freedom states. And I think we've kind of seen that with Texas and Florida as some of the biggest examples, in Wyoming. These states that have over the past few years have introduced laws, put laws in place, or just policies in place, or general like attitudes towards policies that incentivize people to move there, to leave places where their rights seem to be infringed upon. And I really like, maybe it's a bigger thing. And like, I've seen like the charts and stuff, and perhaps you've seen about like the number of people who have left certain states and where they're heading. People are always talking about everyone leaving California and where are they going, right? For better or for worse. But I think we're seeing a dynamic like that play out where we're having states basically planting flags and say, hey, this is what we stand for. And they're polarizing against other states. And I don't know where that's going to lead, but I think it's something to pay attention to. And just one more comment on Ted Cruz, like him or hate him, the guy is a skilled politician. He's been a successful politician in Texas for years, and he's like increasingly started to align himself with more and more of the Bitcoin narrative. So again, positive that you have politicians that are trying to push Bitcoin forward. You should always be suspect of politicians, especially from anyone in the current system that's been around for a while. But I think it's interesting, and it's intriguing dynamic that's at play there.
Yeah, I think that the fact that it's in the discourse and the conversation is good. And some of the politicians actually understand what they're talking about, but many of them don't. But there is another story that just came out that's also putting waves into the crypto space, which is about Coinbase, and they're coming after. This kind of gets back to the choke point 2.0, Patrick, which I think we probably need to explain again. I think we talked about it last week, but here's Coinbase getting a Wells notice. Patrick, what is that?
So the Wells notice is actually a very ambiguous document that says, hey, we're about to do something, and it's not going to be good for you. And so Coinbase
so it's not
is like, hey, apparently we're about to have some action or enforcement taken against us for violating some policy that we didn't know about, so it's coming, but we're ready to defend it. I mean, they have no idea what's coming. They're not yet, anyways, not that we know of. It hasn't been released. What are they really accusing Coinbase of doing? I mean, it's not hard to guess what they're going to try to do, but the reality is Coinbase has so much money to fight this, and they will win, especially on the seat of XRP. It's just not possible. I don't know. Gensler is like such a loser. This guy is losing against XRP. This guy is going to be losing against like many companies. And here you go again with Coinbase. You're going to go fight against Coinbase. Brian Armstrong's team is going to eat you guys alive. You are going to be he's going to fail miserably. Like he's going to be a laughing stock.
Yeah, it's interesting that to see all the actions they're taking against the exchanges. They're going after staking. They recently went after Kraken. They're just trying to push. Well, Choke Point 2.0, which we've alluded to but haven't explained. But Nick Carter, both and myself and Heresy Financial, Joe Brown have talked about it. It's basically that one of the I would. It's not really a conspiracy anymore because it's really happening. The U.S. government is trying to limit access to crypto. They're trying to cut off the off ramps and on ramps between fiat currency, dollars, Federal Reserve notes, and getting access to crypto and back. So and again, it's kind of an art. It's to encourage CBDCs that are coming, and also to encourage the staying in the dollar system. So, Dylan, is that your take on it?
I have a slightly different take on it. And it's just something that I've thought about is, we like to think the government's all, like to demonize them all the time. And,
yes, we do.
And I think it's worth it, right? And they deserve
Yes, it is.
critical eye and criticism.
They deserve it.
But also, I think there are certain things that could be in place, are they're doing because they think it's good for people. If there's an exit of the US dollar, if it is failing and it's having all these struggles, which we think and believe that is true, you don't want people exiting to something that's worse, right? Or it's like say there's a fire exit in a building and there's a fire, and people think that that's an official fire exit, and they go and they open up the door and they take 2 steps and it's really just a drop off on the side of the building. And I think for some crypto projects and places like that, that might be a view that people at the SEC, people in the government think is true. And I think it's true for a lot of them, right? We've seen people lose billions and billions of dollars in capital, invest in supposedly legit projects that were anything but, and legit companies that were anything but. So I think that might be a dynamic that's at play. And I don't know how big or to what level of influence, but that is really something that I've thought about, that maybe that's motivating some of these actions is, they don't want people to get completely wrecked if they start to exit and they follow false prophets or false gods or false assets. I don't know. What do you guys think on that?
I really think I'm kind of leaning more with Patrick that this is a contrived plan. The timing obviously is loose, and they've got several different paths that they can go down this year. But we know that things that we know, bucket one kind of stuff. CBDCs are going to be launched. They've already been launched in other countries, and the U.S. is getting ready no later than July to launch it.
Yeah, I agree with that.
Yeah, but
no, guys, no.
The path is the question.
The government does not want anything good for you. I am sorry. There is no glass half full here. Let's talk about, just throw a random dart on the board. Food. Oh, yeah, they really want what's best for our food. Money. Nope. What about healthcare? Nope. I mean, seriously, when has the government, that's like the joke I started off the show with. Hey, I'm here from the government and we're here to help. Like, no, there is no off-ramp to a better system through the government system. They want you to believe that CBDCs are the solution. That's what they want you to believe, is they're trying to help you. Are there some local government that might have the best interests of the people? Yeah, for sure. Not from the Fed, though.
Yeah, that's if you look at governments through that lens and say governments never shrink. Politicians like there are some career politicians there, including the resident of 1600 Pennsylvania Avenue, who's never had a real job. Although I'm sure he'd tell you about one that probably is fictitious. But they grow the government. The government never shrinks, and they don't represent their constituents. Once they're there, their job is to get funds to the people that got them there in the first place, and to stay there as long as they can. And it's not really about doing the best thing for the people. So. But before we leave the crypto section, and we obviously go to the rabbit hole of government and where that's at, but we have one more crypto topic, which I'm not really familiar with, but I'd love to get to the opinion of the guys, which is this particular tweet from Balaji.
Yep.
Which of you put this in? Is that you, Dylan?
So I added this in there.
Okay, great.
So, yeah, Balaji, I don't know how to say his last name, but he's was involved with Bitcoin, and then he's kind of lost some favor of the hardcore Bitcoiners over the past few years. But this was a tweet that he had penned, and it started this week. Basically, the essence of this week is that The banks and the government aren't telling you the truth. Significantly more banks and institutions are insolvent, and they are basically trying to cover that up. And the house of cards is going to tumble down. And perhaps within the next 90 days, it's entirely possible to see hyperinflation of the US dollar and Bitcoin go from $28,000 as it is today to $1 million per coin. And that basically the Bitcoin is the life raft. It is the only true escape from a hyperinflationary collapse of the US dollar. And he even took a bet on that. And so there's got a lot of people talking about it. So I want to talk about on the show from a couple of angles. One is it's an interesting tweet. Talk about like the chance of it actually happening. Like let's be real. And then because we are talking about prepping, if it does happen, what does that mean? What should people be prepared for and look for? And are you prepared for that? So there's two angles I thought it'd be interesting to discuss here. So the first is what's the likelihood of it actually happening? And is this just a really brilliant marketing and self-promotion tweet by Balaji to try and be relevant? And then the other one is if it actually happens, what should you prepare for? And what does that indicate about the current state of our economy in the world? What do you guys think?
Well, I want to jump in here because I want to talk about the history and give Patrick a moment to see if he can get his lovely picture of the white paper. But for those of you who have never read the Bitcoin white paper, this is the entire white paper right here. I think it's 11 or 12 pages. It's a heady read, but reading the first it's like reading a patent. If you ever read that, it's gobbledygook. But read like the summary, the aspects, but understand the context that Bitcoin was founded upon. It was launched in 2008, 2009, after the first global financial crisis in 2008. So if you go back and watch The Big Short, or you watch Too Big to Fail, and all the banks collapsed, the Bear Stearns, the Lehman Brothers, what we talked about earlier in the show. And by the way, if you're watching this clip, be sure to like, share, and subscribe, and watch the full video as well. Make sure you get the big picture as well. But thank you for watching, regardless how you're watching us. But the context of Bitcoin being launched in 2008, 2009 is kind of a response to the first global financial crisis. And this is kind of the intent of Bitcoin in the first place. So while it hasn't caught on as much as I'm sure the originators wanted by this point, I think now we're seeing the true purpose and people are taking notice. Patrick?
I'm going to answer Dylan's question first, which is, do I think Bitcoin can hit $1 million in 90 days? I'd say I wouldn't put a single dollar on that bet. I don't think it's going to happen. I mean,
Not even a dollar?
I'd put lots of dollars.
I don't
I'd
bet
put
on
a dollar
things
on
that I
that
can't back up, so I wouldn't put $1 on it. No, I wouldn't. I would go buy some more Bitcoin for $1's worth or something, but that's the way I would bet on it. If Bitcoin's going to $1 million, then sure, but it doesn't really change where I'm at today because I believe Bitcoin's going to $1 million. I just don't think it's happening that fast. I think in this cycle we'll likely break 100,000, maybe hit 120, possibly 150, but what we're going to have to see for that to happen is really big money coming in. We're talking institutional money.
Mm-hmm.
And I could see that happening. Well, Jeff, I'd like to hear your
different answer. I'll let you finish.
No, because I just think it's going to grow bigger once institutional money comes in. That's where you start seeing ridiculous, huge jumps in numbers. So,
but what is the money?
I don't know. It would have to be something really significant that drives people to $200,000, and how many people would actually not sell at 200,000?
So
what about 500,000? What about those people who get 750? You're not going to buy a house for your family if you have a Bitcoin? There's no way. I just see way too many hard stops, way too many ceilings to bust through for that to happen. And then you have the entire market cap of Bitcoin sitting at
20 trillion.
What you know what I'm talking about? So I think in 90 days, no, I wouldn't bet on it.
Be 20 trillion at that point. Is that right? 1 million Bitcoin would be 20. That does seem right. Yeah.
Yeah.
Well,
for $1 million times 21 million.
But so okay. So before we get to Jeff, since I posed the question, so Patrick, you say you say inevitably yes, Bitcoin will go there.
Yeah.
But in 90 days, hell no.
Yeah. That's my opinion.
That's for
financial advice.
That's for the first question.
If I was wrong, I promise you, I won't be mad. If this video plays in 90 days and they're like, Patrick, you are the dumbest person in the world, I'd be like, I'm retired. I don't care what you think.
So Go ahead.
Jeff, now,
Dylan,
yeah.
did you have more?
No,
My
I want
turn?
you to answer. I want you to answer because it
Okay.
seems like you have a different perspective than Patrick.
Yeah, I
Or
want to hear your
so-
wrong answer.
So my question, I would answer the question of like, what does $1 million at that point even buy you? So that's where I'm going with it. I'm picturing wheelbarrows full of cash, which have happened in other countries, Zimbabwe, Cyprus. If you don't know what happened in Cyprus, find out, study that too. That's probably, I'll make a note to bring that one for the next history lesson. But that's very relevant right now. But the Weimar Republic is really the simplest answer. And you're looking at a 20x devaluation. So like of the purchasing power in $1 in 90 days. Could that happen? Absolutely. Because we've seen hyperinflation happen before and it happens very, very quickly. That's why I call it hyper. And it's really just it's a manic behavior of people. We're losing total confidence in the currency. And as soon as they get it in their hands, they rush to buy and convert it to something else that has value. That's where those pictures of currency in a wheelbarrow, we get that from. And we've seen that in Latin America. We've seen it in Africa. We've seen it in a number of countries. That's where I think that's how I think that it could go up to $1 million in 90 days because the dollar has just completely collapsed. That's
Could
my
I ask
answer
a
to that question.
conversely opposite question though? If the same thing happens, could not the argument be made that it would be worth $0?
That Bitcoin?
Yeah.
No, because if Bitcoin goes up to $1 million in 90 days, at least from my perspective, that means that people are assigning it more value than the US dollar because it's not falling at that same rate. And so people want to hold their value in something like Bitcoin rather than US dollars, where the US dollars
So
is
no
the
one
one
will
falling
want the
worthless.
dollars. No one will even trade it in the dollars. It won't be available on exchanges for US dollars. It'll be worth nothing in dollars. Nothing will be worth anything in dollars. Your
But-
dollars will be worthless.
But you could buy a
It'll be
chicken with your
priced in
Bitcoin.
dollars.
So you could go to a producer who's producing cows, chickens, whatever it is, whatever thing you need, and they would trade you their chicken for your Bitcoin.
They would not.
versus
Yeah,
the
you'd get
dollar.
a better deal with them. Those people, they're going to want gold and silver. You're going to get a better deal for that. You give, I look at it, unless you got
Gold and
Farmer
silver will-
John there who knows exactly what you're getting, most of these people aren't ready for that yet. They're just not. We'd like to believe that everyone is going to jump on board with Bitcoin because it is like the answer to all of our problems and our savior of our world economy, but it's just not there yet. We don't have enough people who understand it, know how to use it, or are ready to use it. And much less do they know anyone who would accept it if they took it from you. So
I
think
agree.
for
I
a
agree. The gold and
while-
silver will go up. as
Patrick,
well.
you're arguing with yourself. You just you just argued against yourself by saying people aren't ready for it. So in 90 days, there's still going to be, I would say more than half of the United States is going to use the dollar in 90 days. They won't be out of it mentally or physically or the way that they get paid for their labor. There's still going to be the dollar in existence. So I think
therefore,
that
it's not going to happen in 90 days.
right. It could happen in 90. I think that Bitcoin
check
could
in
exceed $1 million
90
in 90 days.
It's not
Pardon?
happening. Let's check in 90 days. It's not even happening. I'd put it's not even happening this year.
It's not happening. I think it'd be terrible if it actually happened because the implications of
It
what
would be.
a hyperinflated dollar would mean, everything would break down. Credit wouldn't exist. You wouldn't be able to facilitate any trade where settlements weren't finalized, right? There'd be no trust in the system. People would have to migrate to other things to hold their value, right? They'd be rapidly seeking other sources. So gold and silver would go up immediately because people know what those are and they want to store any of their time in that. So like say, for example, you get paid, right? You make $500 in a day and it's inflating, hyperinflating. So the next day it's worth, you can purchase half the things you could today with that $500. Well, you're going to go out and buy something immediately that would hold that value, right? And you're thinking like, what could I buy to hold the value? Because obviously the dollar that I just got paid in, because your company's not going to adjust your salary. They're not going to be able to do that in that short of time frame. So you're like, I got paid $500, right? That can, as of today, buy me one cart of groceries. Okay, so groceries might be a thing, but that only lasts a week. You're going to need to get a cart of groceries the next week. So like, okay, I'll buy half a cart of groceries and gold, silver, Bitcoin, right? Or what else that you can trade fairly liquidly or in a fairly liquid manner. And it would be chaos for a good time period.
I think Dylan hit on something I also wanted to mention the same thing and may all opposes to Patrick. Patrick, we've heard many people that are pretty intelligent say that silver could go to $600 or gold could go to 10,000 or more. Do you think that silver can go to $600 in 90 days? the same kind of rate
No.
of inflation. Okay.
No, I don't.
But we've heard the case from Cliff High, and we've heard the case from
okay,
Mike
yes,
Maloney.
yes. If the commodities exchange and the derivatives fail and the banking fraud is exposed, then yes, overnight I could see that. So
we can all create a
that's
narrative
highly more
that happens.
likely in 90 days to happen. Like one of those, like a scenario where they say, "Hey, we don't really have as much silver and gold as we told you," and then they're like, "What do we do?" Everything goes up in one day. Yeah, I could see that happening much faster than I can see Bitcoin going up to 1 million.
Follow up then. Silver and gold have gone up 20x. Has Bitcoin kept pace?
No, it will not keep pace. Bitcoin will lag behind.
Okay. I could see that. I could see that argument, but I'm just setting the
Everyone
dynamic.
and your mother, Jeff, you would go out and buy gold. Dylan, you'd go
Absolutely.
out
And
and buy
this,
silver.
we are economic preppers.
But
look at the logo.
these
Okay. We got the
people don't
logo right
know.
there.
But the thing
it's
is, you
all
can't,
there.
But the big problem with that is,
But most people
can't-
don't buy
you
Bitcoin. They
couldn't-
don't know how to
the only way you
spend
could
their
buy
dollars
gold.
on it.
The only way you could buy gold in that scenario, so is you'd have to trade them something of equal value. They're not going to take a credit for US dollars. Like, you have to trade something physical and get that in your possession immediately if you're in a hyperinflationary scenario. No one's going to be like, "Hey, you can pay me these US dollars that take, a month to actually settle in my account, or could be canceled, and I'm going to ship you that gold." So you have to get it from the source, right?
But the other, sorry, Dylan, but the other thing to consider there is that, like, even if you get a comparable value, you just say, like, okay, today I'll give you 10 eagles for a Bitcoin, just to say that's the ratio. But those of us that study the dynamics are like, which one's going to go up at a higher rate going forward? That's really what investing is all about.
Yeah.
Would you rather hold wealth in gold, or would you rather hold it in silver, or would you rather hold it in Bitcoin, or do you want exposure to all three? Those are the kind of discussions that you have with yourself and people like us, that like, where are we going to go? And we are already in these commodities and currencies and stores of wealth that some people may not have full exposure and understanding to. That's really the conversation, this is a great conversation. We could probably have this for a long time. It could be its own show. And I think
I wouldn't
really
be
great.
mad if gold or silver or Bitcoin went to the moon. I'm prepared for all of those: guns, ammo, gold, silver, real estate. They can all go crazy. I'm prepared for the dollar to fail. The banking news that happened last week didn't scare me. It made me feel happy and sad at the same time. Happy to know that we're on the right path, but sad knowing that so many people have no idea what's coming. And every time, we watched it in that movie last week, but the guy looked at him and said, "I don't know what you two are so happy about." He goes, "Don't you know every time the unemployment rate goes up, people die?" And when you actually think about what this means to the economy, if that were to happen, I'd be happy and I'd be really sad, but I'd be prepared and I wouldn't be scared.
Yeah.
But I think that wouldn't be a very great world to live in. And I think that's what we got to get ready for, is what are we going to do about it? This stuff isn't, what are we talking about that says, hey, things are looking nice? When have we said, hey, things are looking good?
Well, I think,
we found a lot of gold, or we're producing a lot of oil. We're going to increase our exports and GDP is coming in and America is getting richer. We don't hear anything like that.
I think you made a good point, and this is for the audience and all of us, is like, if we're talking about these scenarios, and like Patrick said, he actually felt good because he's been prepared for it. He has these assets. He has access to these things. He's thought about this so that if it happens, he doesn't have to scramble to acquire them, that he has them on hand. And if something like this happens, the demand basically dramatically increases for those things that Patrick just mentioned. And so if you don't have those in your possession, if you think back to a couple of years ago when the demand dramatically increased for something like toilet paper, and you didn't have toilet paper, like, prices skyrocketed, it wasn't available, you can't get it anywhere, right? It becomes a whole hassle to deal with and to navigate that. So if you have these things on hand now and you're prepared for it, you ask yourself the question, like, if this happens, not am I prepared? Like, what level of risk do I say this will happen? Or what probability do I assign for this? And if that happens, am I ready for it? Am I okay if that happens and I'm not prepared for it? How am I going to deal with that scenario? And these are the good questions to ask yourself and figure out the answers to determine your own situation.
Part of being prepared is being ready for various scenarios. And we all feel prepared because we have exposure to gold, silver, and crypto amongst all of us, so that if either one of them take off compared to anything else, we're prepared and we're not scared. But that's kind of the conversation. But to close this really good conversation that we just had out, and I hope you enjoyed it. Please leave comments of what you liked or disliked about it. But Cliff High has been talking about $600 silver for years. But he also often says you're not going to like the world that exists for a $600 silver price.
Mm-hmm.
So now let's turn the page to the other kind of prepping, which is being ready for whatever it is to come. So, Patrick, I think you shared this particular item that you want to talk about.
Yeah, I always like to share at least one thing that I'm doing to help me prepare for events that are coming. And you guys know I've shared a lot about propane heaters. I've shared a lot about propane generators. I've shared a lot about storing 5-gallon propane tanks, or 20-pound propane tanks is I think what they're called. And so one thing I want to share here was this little adapter that allows you to fill a 20-pound or a 1-pound propane tank, those small little camp tanks. You could fill it with this little adapter. So this is a pretty cool tool, allowing you to actually share with your community should someone run out. It's just another tool and a resource to have around. It's like $10 on Amazon and a pretty good find. So yeah, that's just one other prepping tool that I like to throw away in my toolkit, and very easy and very useful should you need it.
That's a good one.
Excellent. Yeah, it's a really good one. And price of propane, if you're not paying attention, that too, yeah, is going up. But propane is really good to have, and it's good to have, a generator that takes propane, whatever you can take propane, because propane stores really well and doesn't degrade over time. So that's a great it's a great one, Patrick. Thanks.
And we'll be bringing up propane freezers here very soon, but you can run refrigerators and freezers off propane too. So really, guys, just consider thinking about what you would do and how you would store propane, because it's a very versatile tool. It's easy to exchange, and should you even need to get rid of a little bit of propane, you could give 5 of your, community members a gallon or a pound of propane easily from that tank, and still have 15 left to spare. So this is like what we talk about when you're preparing. You prepare as a community.
Yeah. And I think you mentioned storing it appropriately. That's key. Storage of this stuff is essential to do that in the right way. It always reminds me of the movie Trimmers with Burt Gummer. I think it was like Trimmers 1, 2. It was like Trimmers 2 or Trimmers 3 if you haven't seen it. Burt Gummer, super like prepared prepper, survivalist, conspiracy theorist type guy. And he had all his equipment and food in one place. And then one of the trimmer evolutions, I think it was a screecher. If you haven't seen the movie, you won't know these terms, but as a screecher got in there and he had to blow up his whole building, his whole place where all his stuff was stored, because he didn't store it appropriately and didn't plan for his compound getting penetrated by the enemy. So
yeah,
storage
it's really good. If you're preparing, it's always good to bring another prepper or somebody who can think outside the box with you, and just play what if. What happens if you get flooded or a fire, or what is your plan B? What could happen? And maybe it's just simple as like storing in 2 different places or 2 different heights or a second level, whatever makes sense. But these are things to consider. Like if you have 1,000, if you have a lot of seeds, but they're all in one building, whether the building blows up or is destroyed, you don't have any seeds anymore. Something to think about as you get through, and you not just acquiring the stuff you want to store and keep to be prepared, but also storage as well. So great discussion, guys. It's time to move to our last segment, which is about history and woo-woo. And I got a little bit for both of them. I know we talked a lot about currency, but did you guys ever know that we had a currency in the United States that was backed by silver, that was paper? Were you aware of that?
Yes, I was. I think I have a silver certificate somewhere.
Yes. So I have an image of one here, and let me share it. It's right here. So this is from, let me see what year it's like, 1953. So if you look closely, it says silver certificate right at the top. So you could actually exchange this for silver. So silver on demand. So this was one of the reasons that in the 60s, when a certain president, so this happened in the 50s and 60s, and a certain president in the 60s, JFK, wanted to get rid of or take more control away from the Federal Reserve, because he heard about the military complex that Eisenhower, the industrial complex of the military, that he talked about in a famous speech. Well, Kennedy was trying to move away from the Federal Reserve and saw how big of that problem that was, and go back to a silver standard and a precious metal standard. This was it. Now, keep in mind, this is 1963. So in 1963, Kennedy, it was, I think, let me check the year, the month. It might have been May, June. So let me share one more time. We got June. Whoops. So there we go. So we got Executive Order 11110. And I don't know how far or what, I don't know where the numbers started with the executive orders. I'd be curious if you know, please leave a comment down below and like and share. And I like cool stuff. And we really appreciate you watching. But Executive Order 11110 was about taking power away from the Federal Reserve and giving it more to the Treasury so that the Treasury could issue silver-backed currency notes. So
the first executive order was issued by Washington on June 8th, 1789, and it addressed to the heads of the federal department. It instructed them to impress me with a full and precise, distinct general idea of affairs of the United States.
Interesting. Did they number it back then?
Yeah, Executive Order 1 was June 8th.
So I don't think we've ever.
Yeah, that was number one.
11,000 orders? That's crazy. Okay. Well, in any event, there's even here on Wikipedia, this talks about the same year, 1963, and I know this date because my birth date is the day before. It's November 22nd, 1963 in Dallas, Texas. No, I wasn't born in 63. But November 22nd was the day that Kennedy was shot in Dallas. And there's so many conspiracy theories about this. But one of them is that the CIA was involved. That's a common theory. But one of the motivations for it was the fact that Kennedy was trying to get the country back to a precious metal standard. Mm-hmm. And he was trying to move.
Came up with the term conspiracy theory, Jeff.
That's correct. The CIA actually created that term. You're correct. Yeah. So
I just learned that last week. I'm so impressed, just so you guys know.
Good job, Patrick. Way to put that into the conversation. I'm proud of you. So here we were in the 60s. So picture the 60s. We got a Cuban Missile Crisis. There's people worried about another world war, but Kennedy's attacking the financial system. Meanwhile, Kissinger and other aspects of the CIA, if you haven't read Confessions of an Economic Hitman, check it out or listen to it. It talks about how the U.S. was trying to push the influence of the dollar to other countries to get them to use the dollar and expand the need for dollars around the planet, because other countries like France were trying to get their gold back from the U.S. So 8 years after the assassination is when Nixon took us off of the gold standard. So there was this is a 8-year, 10-year period of a currency war that was part of a global dynamic of a president being assassinated, several other presidents being installed, and a president stepping down with Nixon, and the petrodollar being launched. There's a lot going on. Kind of what's happened. Not as bad as today. I think today is way more information, but you get the idea that this has happened before. And they have taken, if you believe in the conspiracy, they have taken action on it. So, and this is going to lead me to my second and final story for today, which is a little bit more woo-woo. And Patrick, please get this video ready if you could. But this is kind of like, have you ever heard the term fossil fuels?
Wait,
Dylan, Jeff, you've heard that, right?
Can I point out something real quick?
Go ahead, Dylan.
Yeah. So can you pull up that silver note again?
Note?
Yeah.
Yeah, here you go.
So look at that. That looks familiar, right?
Looks very familiar.
But the $5 bill that we have today, even though it looks very, very similar to that, obviously represents something completely different. And so we've talked about CBDCs a lot. And so that's something to keep in mind is it'd be silly for them to potentially change what you're used to, even though they change the function and what it actually represents. So this looks exactly like basically like a $5 bill today. A lot of people would have this in their wallet. They would see Lincoln, they would see a 5 and they'd spend it just like it was a $5 bill, not knowing that what did you say, silver's worth like $23 or so an ounce.
Yeah, but you can't get silver for them anymore, so it's still only worth $5.
I know.
Paper price, yeah.
But that it represents over $100 worth of today's value. People would just spend it like a $5 bill, not even knowing the difference. So there's something to think about when the CBDCs come out, that they may not look different. And they may not necessarily feel completely different. They might be represented by symbols and characters that you have this innate trust in. Just something to keep in mind.
That's a great point, because if you go back again in the 60s, 1964 is the last year that we had 90% silver coins and dimes and quarters, and half dollars lasted a few more years, but they went to tin and zinc and alloys after that. So again, they were taking the precious metals out of the currency system. So you're right. They will make it just like But the thing I think about now is that most people transact with Zelle, Venmo, electronic transactions, over 90%. So to make a digital dollar in some form is people will accept it, but they won't know the nuance of change that's being implemented that impacts their freedom and their liberty. That's what our job is, to educate them about.
Exactly.
So the last story to educate about today, and to go into the woo-woo part, let me go here, and we're going to talk about, well, Patrick's got the video ready. So this is the history of fossil fuel. So the term fossil fuel was actually coined over 100 years ago. It's actually a fake science, and I'll put this link in the description. But basically, I think it was Colonel Fletcher explained how Rockefeller coined the term fossil fuel in 1892. There was this big conference that they had about carbon. Imagine that, about living things, and somehow, because there was a tie between oil and carbon, they got them to somebody as an expert to talk about that they could say oil is petroleum is a fossil fuel, and therefore will become scarce over time. And that's what was coined in 1892. And the video that we're about to share here, this is Patrick. Go ahead and play it.
World price. That's their goal. And they're trying to do that for wheat and everything else. We don't realize what the controls are, whether it's oil or some of these other things. Almost everything today is being categorized at the highest price they can possibly make it go. And so calling petroleum a fossil fuel is the basis for this system with respect to petroleum. And I don't know if the name Arthur Kantrowitz rings any bell. Arthur Kantrowitz is the head of the Kantrowitz Labs, set up by the Avco company near Boston, scientific laboratories, and a great man in the scientific world. And Kantrowitz and I were sitting at a table at this seminar once, and the table happened to be all young college grad, PhD geologists. And so just to get a conversation started, I turned to Kantrowitz and I said, Arthur, what do you think about this foolishness of these speakers talking about fossil fuel? And it was kind of put up. He started laughing. He said, that gets me. He says, I don't have a geology degree, but he had 1,000 other degrees. And he said, I don't understand. He said, you'd think that these other fellows at the table, we did it on purpose, start listening, And he said, are you gentlemen? He says, you're here at the meeting. Are you gentlemen by any chance geologists? And one fellow, yes, I am. And the other, yeah. He said, well, why don't you tell me? He said, why is oil? And he went on like that. We brought the house down because nobody could argue with Kantrowitz. He like Einstein. People aren't going to. And he told them right there. He said, just drop it. But it's in all the books, in all the papers. But it started from that strange meeting in 1892, a scientific convention. I have a big, thick scientific encyclopedia put out by the Divan Ostrin Company that's about 15 years old now, but it has the whole story of the conference. It doesn't have the Rockefeller part, but it has the whole story of how they straightened out organic chemicals and how it was all figured, and they've got petroleum right in there.
Amazing. So
these aren't accidental things, you see. There's a dollar sign behind almost everything.
Yeah, and that speaker right there, thanks, Patrick. That speaker right there, if you look closely, that's actually Colonel Fletcher Prudy, who's mentioned in this article. So I actually found that video of him speaking on that topic and where fossil fuels came from. So Rockefeller got that term coined in 1892, which led to petroleum and the huge amount of wealth that Rockefeller was able to obtain through controlling oil supply, and everybody thought it was scarce because it was a fossil fuel. So that's really in bucket one, Patrick. So don't even, we're not going to go too far with that, but I just wanted everybody to know that fossil fuels is you should laugh at the term.
I don't really care what they call it. I need it to get to work. So
well, the falsehood is that
I need it.
The falsehood is that it's scarce, and that there's many people that believe that the earth makes it's a question of how petroleum is made. But there's a book I just purchased. I don't remember what it was, but I'll have to read it and get back to you guys on it. But as I was doing my homework on this, there was a book there that said you got to read this about how petroleum is really made or it's generated. It's really interesting. But to create this false scarcity really created a ton of wealth for the Rockefellers. So that's a little bit of woo in history for today. This was a longer episode for sure, but this was a great discussion, guys. If we had a guest, it'd probably be over 2 hours. Dylan, what do you got to say?
One other thing that I think is interesting that he said is create a one world price for all these things. So it's one price for oil, for wheat, for these core commodities, things that we need to live and thrive on this planet. If there's one price, that means it's denominated by one thing. And if you control the thing that all things are priced in, right, you have captured all that demand. And if you can manipulate that thing, you then have control over all the things that you need for the society to function, right? You are the hand that feeds everyone, and they must, listen to you or else.
So there's Dylan's campaign slogan for
dollar.
Yeah, Dylan just said he wants to be president of the Federal Reserve. That's his campaign slogan right there. He figured it all out. It's exactly what the whole point of the dollar is at this point, the last 50 years. And that's why, again, Confessions of an Economic Hitman was about pushing the dollar into the rest of the world. And that's what has happened in the last 50, 60 years, especially since Kennedy. That's conspiracy or not, that's what's happened. But lots of great conversations today. Patrick, what are your final thoughts for today?
Guys, be prepared, not scared, right? There's lots of great information out there. The signs are all around us. Just make a change, right? Do something today different than you did last week to prepare you for the stuff we see coming around us.
Dylan?
I think it's easy to, get scared when you hear these crazy stories, Bitcoin to 1 million, collapse of dollar, all this kind of stuff that are probably don't have a high probability of happening anytime soon. But if you are scared, ask yourself, like Patrick said, what have I done to prepare for that? Right? Do I have everything in place? Do I have I done enough? What else could I do so that I can kind of ease my mind on some of those things? Right? Don't obsess over it, but think about those things. Ask yourself those questions, and come to conclusions that work for you and your situation.
Yeah, there's no question times are hard for people, and we get that. And it can be overwhelming, being prepared and not scared. But think about what you can do to make yourself prepared, but also think about community. Build a community, have people in your area, because they could be very well the ones that rely on you, or you rely on them for the things that you need when you least expect it. So that's part of being prepared. So I know it can be overwhelming that you think, I need all these different things all at once, and I can't afford them. But if you work out a network or a group of people that you can talk to with one another, you can be much more prepared and not scared. So with all that said, I'm going to say goodbye for this episode, and thank you for watching, and we hope to see you soon.